evening. You're watching Business Day right here on ET Now. I'm Avan Dabash. Let's take a look as to how the market shut shop this Tuesday before we take you through the top headlines. Well, disappointing for the equity markets after a solid start. We went on to flirt with the 6100 level, and by the day's close, what a reversal. It was below 6050 with all sectoral indices deep in the red. A weak market breadth and deep cuts for the broader markets as well. So by the day's close, 6048, that's where the Nifty shut shop. The Sensex down by 120 points at 19,981. We get you all the top stories at this hour after the headlines. Finance Minister P. Chidambaram says the government is committed to bringing the fiscal deficit to 4.8% by the next fiscal. Kicking off the roadshows to drum up investor confidence, Chidambaram says there is no case for a ratings downgrade. Hindustan Unilever disappoints the street. Volume growth slides to 5% in the third quarter, even as margins shrink in the soaps and detergents business. Adding to the woes, the company will have to now shell out more as royalty to its British parent. Kingfisher may take wings again. The Aviation Ministry sources say that the airline will be allowed to take off once the salary dues are cleared. Also say that the airline has got the necessary clearances from all concerned. After a stellar rally in 2012, sectors like FMCG and pharma give way for new sectoral leaders. But the LIC chairman D.K. Mehrotra tells ET Now that Infra, the state-owned insurance, will also invest in infrastructure companies. GMR gets the green light from the Forest Advisory Committee for its Kishangarh-Ahmedabad highway project. The Highways Authority says GMR's reasons for pulling out of the project are no longer valid. Also asked GMR to rejoin the project. Well, an earnings-heavy day, but let's take it to the top story at this hour. And Finance Minister P. Chidambaram has kicked off his roadshows to attract foreign investors in India. The Finance Minister is in Hong Kong today, where he assured investors that the government is committed to bring the fiscal deficit to 4.8% by the next fiscal. He also said that there is no case for a ratings downgrade and reiterated that the recent reform momentum of the recent months will be sustained by the government. Let's get in Mrinalini Krishna, who now joins in with more details. Mrinalini, outline what exactly the Finance Minister had to say.
Well, it was a hard sell for Indian economy. Finance Minister P. Chidambaram met with institutional investors in Hong Kong today, and he did say that under no circumstances will the fiscal deficit target for FY13 be breached, and for FY14 it will continue to, the government will maintain its fiscal deficit target of 4.8%. In fact, he also said that fiscal prudence will be the key highlight of the budget that he is going to be presenting very, very soon. He also did add that there is at this point in time no case for a ratings downgrade as far as India is concerned, and as far as bridging the fiscal deficit is concerned, the government will look at raising revenues by increasing tax collections, but that tax collection is not going to be done by raising taxes. It will be done by better tax administration. The government is also looking at other avenues for additional resource mobilization to bridge that gap. Apart from that, he's reassured investors that there is going to be a stable tax regime. There's nothing that they have to worry about. So clearly sending a strong positive message as far as global investors are concerned. He also added that the Cabinet Committee on Investments that was set up recently that will be looking into clearing projects that have been stuck for the lack of clearances over a long period of time. It will be meeting in the end of this month, and that process will also start with clearances coming forth for projects. So it's a huge push for investments from foreign investors for the Indian economy as far as Finance Minister has met with institutional investors in Hong Kong today.
Okay, thanks very much, Mrinalini, for giving us all of those details. Let's find out how the equity markets panned out. And as pointed out, after getting off to a very stellar start, it was down all the way and grinding down. In fact, off by just about 0.5% by the day's close. And it was a complete sectoral thrust, given that all of your sectoral indices were deep in the red. A pretty similar picture was painted for the broader markets as well, so they didn't manage to hold up either, seeing solid cuts for the broader markets. In terms of sectoral indices, well, on account of Unilever's numbers, it was FMCG that saw a big tumble. The real estate index also was down and out. Consumer durables, cap goods, and the whole really saw quite a bit of selling pressure. Some of the big index losers included Unilever, GAIL, HCL Technologies and Ken India. Some stocks which were in focus today on account of numbers, you had Kotak Mahindra Bank, which put out a good quarter in terms of all of their parameters. So the profits came in higher by 26.7% at 586 crore rupees. You had the net interest income. This also beat the ET Now expectations to come in at 1,231 crores. That's higher by 23%. Asset quality fairly stable, 1.2% in terms of the Q3 gross NPAs, net NPAs at 0.5% versus 0.6%, and net interest margins stable at 4.6%. The stock also received that quite well, higher by 1.5%. Here was the big disappointment, Dish TV. The losses widened significantly and surpassed all expectations. We were expecting a loss of close to 22 crores. It surpassed that to come in at 45 crores this time around. Net sales largely in line with what the street was expecting at 556 crore rupees. The EBITDA margins came in at 24.7% and the ARPUs also came in lower than what we expected at 160 rupees, largely on account of the high content costs as the management had elaborated. Aptech also a bit of a disappointment, 6 crores in terms of the profit. That's higher by 1.7% on a year-on-year basis. It was the top line figure which was a bit disappointing, off by just about 8% at 36.7 crore rupees. The stock didn't take that information too well. Bank of Maharashtra absolutely flat by the day's close. The profits came in higher by 42% at 194 crore rupees. Fairly stable in terms of the net interest income at 800 crores. That's higher by 24%. And the asset quality also stable for Bank of Maharashtra. Some stocks in focus today. Take a look as to how Pantaloon panned out, a good 9% higher by the day's close as the RBI notified the FII holding in the company which has gone below the prescribed threshold and it has withdrawn restrictions on the share purchase by FIIs in the company. Some of your jewelry stocks were seen under pressure, the likes of Titan, TBZ, Gitanjali Gems, as the import duty on gold and platinum was hiked to 6% from 4%. We also spoke to the management of Gitanjali who said that they will be passing on this import duty hike to the customers, so not too much of a worry. Asian Paints, remember yesterday they put out their numbers and it was received very well by the street. 335 crore rupees in terms of the net profit versus 257 crores. Consolidated income from operations came in higher at 3,053 crore rupees. Geometric, though, a big thumbs down. The consolidated net profit was at 19 crores vis-a-vis 17 crores on a year-on-year basis. Revenues at 251 crores versus 261. Similar picture for a Raymond, in fact, where you have the profits this time around, which came in at 12.8 crore rupees, a massive downtick from what they had clocked in last quarter at close to 61 crores. And you had the consolidated interest income, net income, in fact, which was higher at 1,052 crores. Zensar Technologies also from IT. This was a big disappointment given that all of the frontliners have surprised on the upside. So 48.7 crore rupees versus 32 crores and the net sales at 525 crores. Some of the index gainers, Asian Paints is pointed out. Cement had a good run, so ACC featured on the list. NTPC and Kotak Mahindra Bank giving a thumbs up to its numbers. But of course, a large part of the reason as to why we saw a downtick for the index was because of HUL. In fact, its third quarter earnings disappointed the street with the net profit coming in at 87 crores. That's a 16% rise on a year-on-year basis. Bottom line met expectations, but what really disappointed was Unilever's new royalty agreement with its parent, which rose to 1.4%, rose from 1.4% to 3.1%, and it was also the volume growth which disappointed. Let's get in Navneet Saluja. She's here with all the number crunching. Very disappointing for Unilever, Navneet.
That's right, Avan. It's been a very weak performance from HUL. That's the third quarter performance. Well, it's been on all grounds. Have a look at the PAT and the top line figure. Both were below our estimates. And even if you look at the volume growth, second straight quarter of disappointment. This time around, it's about 5% versus the estimate of about 8%. When I spoke to a couple of analysts before, they said volume growth of 7% have been factored in. But below that, you can see a huge downside to the stock. And we are waiting for the brokerage's reactions for that. And overall, if you look at the performance, the other negative news has been the royalty increment, which is totally doubled. That is till FY18. It can go up to 3.1%. Remember, the current royalty is at about 1.4%. So that's another disappointment because the outgo will increase. And if you look at the ad expense, well, there were a couple of launches because of which the ad expenses have gone up. Even the other income this time around came in at about 134 crore versus 80 crores. And if you look at the segmental performance, well, soaps and detergents have been the major disappointment, because if you look at the margins from the main segment of the company, that has declined by 100 basis points. So all in all, very bad set of numbers declared by HUL on volume growth. Again, a royalty payment is a negative news for the company. So wait and watch what the brokerages have to say on the numbers. You can expect downgrades coming in.
New royalty agreement that the board has approved today, which will come into effect from February of 2013, is really in the context of the growth opportunity in the Indian market as well as the competitive environment. In financial terms, the new agreement will really translate into the royalty cost as a percentage of our turnover, which is currently about 1.4% of turnover, going up over a number of years to about 3.15%.
Okay, thanks very much, Navneet. And that was the management of Unilever talking more about their numbers. But moving on to the aviation space, and let's get you an ET Now exclusive. Senior Aviation Ministry sources tell ET Now that the government is willing to consider giving support to the troubled airline Kingfisher only if it clears the salary dues of its employees. That means it will need to invest at least 1,000 crore rupees for its revival. Now this, remember, coming in the backdrop of the Kingfisher CEO meeting with the Aviation Secretary today. Let's get in Sumit Chaturvedi, who now joins in with all of the exclusive details. So finally, hope for Kingfisher, Sumit.
Well, in an effort to revive the airline, the Kingfisher Airline CEO today came and met Aviation Secretary. Thereafter, the government sources are telling us that government is willing to extend support to Kingfisher Airlines revival plan only if first clear the employees' dues first. Well, the employee dues ranges anywhere between 100 to 150 crore rupees. Government sources also told us that as far as the airport dues are concerned, they can be discussed later, and banks can also find their way to recover dues later on when Kingfisher Airline is flying again. But as far as its revival plan is concerned, they are willing to support if the employees' dues are cleared by Kingfisher employees first. Also, they are saying that 1,000 crore rupees Kingfisher Airline has to bring in to start the airline and to keep the airline going in the long term as well. So this is the detail. This is the detail coming, and it's a climb down of sorts coming after a long time. So it's kind of good news for Kingfisher coming after a long time. Kingfisher Airline owes around 200 crore rupees towards employee salary and around 200 crore rupees towards different airport operators, including Airport Authority of India and Delhi Airport.
Indeed. Thanks very much, Sumit, for giving us all of those details. The stock price also reacted very well on the back of that information. Now, the Forest and Advisory Committee of the Green Ministry today recommended forest clearances to GMR's Kishangarh-Udaipur-Ahmedabad highway project. The clearances was the main contention, remember, for GMR to terminate this highway project. So how does this green nod at this stage impact the overall project for GMR? Suchetna Ray is here with the answer. Suchetna.
Avan, it does not bode very well for GMR. Yes, it's good news that the forest clearance for this mega highway project, the largest in the country, stretching over 555 kilometers. This connects Kishangarh, Udaipur and Ahmedabad, will finally see the light of the day. But remember, GMR has already terminated their contract with NHAI for this, and they have cited delay in clearances as the main reason for terminating the contract. But sources in NHAI say that since the clearances are now in place, their logic for terminating this entire highway project is now untenable. Remember, there's a High Court case that's going on between GMR and NHAI over this, which again NHAI says will be difficult for GMR to get a stay on the bank guarantee going forward. So NHAI sources tell us that they are open to renegotiating with GMR. They're open to allowing GMR to come back and get into the project once again. So it is not very good news for GMR, because they had used this very logic of delay in forest clearances as the main reason for terminating the contract. Now it is in place. So what NHAI tells us is that it is actually the big problem for GMR to now get the money for the project going. It's about over 5,000 crore that is required for this mega highway project to start processing.
Okay, that's quite a bit of money that they'd have to cough up. Thanks very much, Suchetna, for giving us those details. Meantime, with the deposit growth languishing at just 11%, banks are now faced with mounting asset liability mismatch issues. According to a report which was just put out by Fitch India, the one-year asset liability mismatch for banks is at an all-time high. Let's get more details on the back of those numbers and what exactly this means for some PSU banks. Anirudh Ghosh now joins in with the latest. Anirudh.
Well, what's basically happening is that banks are creating long-term assets through short-term deposits. Basically, they're giving long-term loans and they're funding it through short-term deposits, whether it's retail or corporate, and that, of course, is what's leading to a long-term mismatch in Fitch's point of view. And clearly, if you look at what's been happening, if you look at the numbers that have been put out by Fitch Ratings, there are a number of banks that have this mismatch on their books. And if you look at the kind of deposit growth figures that are coming out from the RBI at this point of time, we have deposit growth at just 11%. That, of course, is much below the RBI's projection of 15%, also much below than the current credit growth level of about 16%. So clearly, banks are going to be strained for deposits as they go forward. And of course, remember, everyone is expecting interest rates to come down from here on. We're expecting that the RBI is going to come in with a rate cut. Of course, when that happens, banks are going to find it even more difficult to cut deposit rates because remember that they have to keep deposit rates high to ensure that people put in money into their deposit schemes. At the same time, they will have to bring down deposit rates to ensure that there is a lending rate cut. So clearly a lot of problems on the hands of the banks, and a lot of banks which have this particular problem of asset liability mismatch, the likes of Vijaya Bank, the likes of City Union Bank and a few other smaller banks are going to be facing this issue in a very big way.
Okay, thanks very much, Anirudh, for giving us all of those details. Let's deviate then to the retail space, and the government's efforts to fast-track FDI in retail suffered a minor setback today, with the Supreme Court raising over the decision to allow FDI in multi-brand retail. Let's get in Devduta Das, who now joins in with the latest details. Devduta, what exactly did the Supreme Court say and why?
You know, this is not the first time that the government is coming under fire for its FDI policy in retail from the Supreme Court. This is the second time around that the Supreme Court is raising concerns over the kind of impact that this policy will have on small traders. The fact that the Supreme Court today observed that once these artificially lowered prices by the global giants are put in place, what will happen to small traders if they are not able to deal with such prices? How will the entire mechanism function? The fact that it's been 7 weeks since the Parliament has given the policy a go-ahead. What kind of fruits have this policy borne? These are questions that the government will have to answer within the next 5 weeks. But this comes at a time when the world's largest global retailer that is also trying to enter India, its Indian operations are under probe. Walmart's Indian arm is under probe, under an internal probe for alleged violation of anti-US bribery laws. Not only that, it is also under an ED probe for alleged FEMA violation. So the FDI policy per se in multi-brand doesn't augur too well right now for the government, and it is coming under the fire for a lot of reasons for this policy per se.
Okay, thanks very much, Devduta, for putting that into perspective. Okay. Just in the meantime, let's walk you through the kind of results that Kotak Mahindra Bank had declared, because the management is readying up to address the media on the same, and would be interesting to know if we can see this kind of a performance accelerate in the coming quarters as well. It's not like the analyst community was going into these numbers with much of a disappointment, and they have delivered as per expectations.
2012. At the bank standalone level, we have closed the quarter with a profit after tax of 362 crores. Which compares with 276 crores for the same period last year, which is a growth of about 31%. We've had a very healthy loan growth during this period on a year-on-year basis. At bank standalone, a 26% loan growth. We crossed 50,000 crores of the advances book at the bank standalone. And if you look at year-on-year, the growth has come from each of the three verticals we talk about: consumer, commercial, and wholesale. For this quarter, you've seen larger growth in the wholesale and the agri division, as we call it. We closed this period with 407 branches, adding 18 branches during this period. NPA is pretty much under control. We have a gross NPA of 1.2%, which is compared to 1.33, which was just a quarter ago. And at the net level at 0.62, which is against 0.73 3 months ago. Again, our restructured asset number, which are considered standard, is pretty low. Our overall number on that count is just 10 crores, which is 0.02% of our overall advances. Cap add continues to be pretty healthy. We have an overall cap add of 15.6, of which Tier 1 itself is at 14.2. We have a 26% CASA, and we've seen a savings growth of 50% on a year-on-year basis. Return on assets at the bank standalone standing again healthy 1.8%, and costs pretty much under control. At the bank standalone level, the cost to income is now at 49.2 for the quarter. Overall, for the consolidated, this quarter has seen a profit of 577 crores as against 463 last year, which is a 25% jump. Advances at the bank at the consolidated level at about 67,000 crores, 27% rise from about 52,000 crores last year. Again, NPA is pretty much contained at the overall group level, with gross at 1.02 and net at 0.53. NIMs continuing to be healthy. We are at the console level at 4.6 for the quarter. Other than the bank, large contributions of the console profits coming from Kotak Prime, which is 105 crores, the insurance company clocking 53 crores, and the securities company getting in 38 crores of post-tax numbers. So those are the broad highlights for this quarter as such.
Sir, Ritu here from NDTV. So my first question would be on the margins front. This quarter again we have seen a slight bit of deterioration if you look at it on a sequential basis per se. What is the reason essentially, and in the medium to long term, what kind of levels should we look at for the bank standard?
Yeah, it's a marginal 10 basis point. As Jaimin explained this time, we've seen a slightly higher corporate loan book growth really. So that automatically normally is at a lower NIM. But it generally will be around this. I don't think there are any significant NIM pressures in the marketplace at this point.
On the growth front, sir, what is your expectation on the credit growth? And again, would it be driven largely by the existing corporate book, or are you seeing more focus on the retail segment, and that is which will start contributing substantially?
So this probably quarter it is marginally higher on the wholesale side, but if you look at the three segments, growth has been reasonable across the three segments. Though within the segment, there are some which have grown more than the others. So I think it still will be in the 20 plus range. It will continue to be at that rate really.
So your gross NPAs have remained flat, your provisions have gone up. Are you seeing any specificity, and also going forward, how are you seeing that?
Well, let's look at it. The provisions also include standard provisions. And as the advances book has grown up, the requirement for standard provision goes up proportionately. So that has, in a manner, contributed to bulk of the differential for this quarter.
So on the wholesale front, was the demand more for the new projects, or so that's working capital?
Largely working capital. New project, there is really very little demand per se in the economy. Not too much really.
How much is the retail share of the total loans as of Q3?
Roughly 50-50. Roughly 50. Yeah, but that's how it is. So it's not that the wholesale has grown very significantly differently. It's marginally better, marginally higher.
Going forward, do you feel that the mix would remain at?
Yeah, I think we've said that this is a healthy mix, and we'd like to keep it around this level really.
So there is no additional focus?
No, not like that. As I said, you see, more or less, if you see the three segments of ours, which is wholesale, consumer, and commercial, have broadly grown similarly.
Okay, that is the management of Kotak Mahindra Bank enumerating more on the numbers. They have said that their NIMs were impacted on account of a higher corporate loan growth, and the loan growth this time in the third quarter stood at 26%. Savings growth stood at 50% on a year-on-year basis for Kotak Mahindra Bank. We spoke about how on all parameters it did surprise on the upside and come in largely in line with what we were expecting. But moving away from that, LIC, which is the largest institutional investor in the markets, believes that it will continue with aggressive investment strategy and expects to pump in more than 45,000 crores into the capital markets this fiscal and will take the opportunity that comes through the divestment process. Let's hear out the LIC chairman D.K. Mehrotra in an exclusive chat with ET Now.
If you look into the fact that some time back we had said and we had expected that the market would be touching to the 20,000 mark by the end of the year, and you see it has reached there. So we were very bullish on the market right from the beginning. There were certain cases where the market was a little volatile, so it happens. In a life cycle of a market it would happen. But we had been scanning the market very closely, and today we are happy that it has reached the 20,000 mark. So as I said that we have been scanning a lot of companies in the market, and today, yeah, we are looking into areas, as I said earlier, areas such as pharma, such as FMCGs, IT. We are looking into those areas, and I think that when we close the fiscal, the market will still further consolidate and give us good upside.
And what would be the investment from your side look like, and how do you stand as of now?
See, last year we had done on about 45,000. I'm sure that this year also we'll be able to reach that figure. And if some more this investment opportunities come,
so there's a chance that you'll surpass that.
We may.
We all know the OFS process. It was players like LIC who first tested the waters when it was introduced. Now a lot of changes have gone through in the regulations. A lot of fine tuning even has happened when SEBI has done something, board meeting. Now, couple of more government PSU divestment expected. Would LIC continue its aggressive stand as we have been seeing?
Second, I'll say that we are not very aggressive. We look at the opportunities. So if some good opportunities come through by way of this investment as well, we'll again have a look at it. And if we are able to find out good value into it, definitely we'll participate in that. We have no issues on that.
Okay, that brings us to an end of this edition of Business Day. Thanks so much for watching. Keep it with BT Now.